These term market offtake agreements give producers certainty around the pricing that they sell their material for. And they do the same thing for the utilities. But that also increases the visibility of the free cash flow to the producer, and it makes production financing easier to occur than would otherwise happen. What I think you're going to be able to see is that
Get ready to dive into the latest insights on uranium with none other than Rick Rule. In this exclusive update, Rick shares his expertise and perspectives on the uranium market. Don't miss out on this invaluable opportunity to stay ahead of the curve in one of the most promising sectors of the resource industry. So, do not go anywhere and watch till the end.
I suspect that this cycle will be more muted than the prior cycle, in the sense that the prior cycle occurred at the end of a 20-year bear market. And there was simply no capacity to increase supply as a consequence of a 20-year bear market. This market, to be sure, has room to run, because the simple fact that the uranium price has gone to $100 a pound doesn't increase supply. You need to find mines, you need to permit mines, you need to bring mines back under production. I would suggest in the next 18 months that supply will grow between 15 and 20 million pounds per annum from the restarts of both the Kazatomprom and the Cameco hot-stopped projects. It's important to note, though, that both companies have said that they won't restart idled capacity until they have enough material contracted for long enough in the term market that they earn a reasonable return on shareholders' capital. So I think what you're going to see is pricing discipline. The other thing about this market compared to the last market that's better than the last market is that we're seeing in this market a real return to prominence of the term market over the spot market. In the last market, both producers and consumers were hampered with no price certainty. What we're seeing very recently, perhaps as a consequence of Sprott buying up most of the surplus inventory that was available in the spot market, is that most transactions today are taking place in the term market. These term market offtake agreements give producers certainty around the pricing that they sell their material for. And they do the same thing for the utilities. But that also increases the visibility of the free cash flow to the producer, and it makes production financing easier to occur than would otherwise happen. What I think you're going to be able to see is that companies that wouldn't necessarily otherwise be able to obtain production financing, if they have term agreements with investment quality offtakers, Duke Power, the Southern Company, Ontario Hydro, they'll be able to take those agreements to financial intermediaries like Sprott or Orion or the Royal Bank of Canada, and projects that would have been unfinanceable in the last cycle, I think will be financeable in this cycle. So it will be different in the sense that there is more expertise. There is the benefit of the exploration that occurred last cycle. But the financial structure that we're going to see in the uranium business for the next 10 or 20 years is going to be, from an investor standpoint, much, much, much more sustainable. You made a really good point, and I think that's healthy. In the last cycle, if you measure from trough to peak, the number of junior companies involved in the uranium business increased from 5, I own them all, to 500. Now, to put that in perspective, the number of teams capable of running a uranium company at the beginning of the cycle after a 20-year bear market was, in my estimation, between 10 and 15. At the beginning of the cycle, you had 5 companies competing for 15 management teams. Pretty good arithmetic. At the end of the cycle, you had 500 companies competing for 15 teams. Pretty bad arithmetic. In that sense, this market is much more sensible. At last count, there are 81 companies purporting to be in the uranium space, with still 15, perhaps 20 teams now capable of running a uranium company. So the probability that your junior has access to high quality leadership is now 1 in 4 or 1 in 5, down from something more like 1 in 50 at the peak of the last cycle. It's a much, much, much healthier circumstance out there. Of the 81 companies that we see on a global basis that purport to be in the uranium business, we think as many as 15 of them are relatively attractive. While that doesn't sound like a great headline number, if you compare it with the length and breadth of the junior mining market, it is fairly attractive. I think that's a bigger story than uranium. I think if you look back over the last 40 years, that we've benefited from a time of historically low global tensions. And I think that's true across commodities. What we're beginning to see now is the end of that era, which is unfortunate. You are looking, as an example, at the continued ascent of China. And China is doing precisely what the United States and Western Europe did in the 50s and 60s. They're looking to secure access to supply. That's what the Japanese did in the 70s or 80s. The Chinese aren't doing anything that we didn't do, but there's increasing competition. At the same time, as you suggest, that the outlook in geopolitics is becoming less friendly. Now, thus far, with regards to uranium, despite the fact that we're hostile to the Russians, American imports of reprocessed uranium increased by 50% last year. Thus far, we seem to have sanctions where nobody gets hurt. I suspect that the United States and Canada, among others, would like enrichment and re-enrichment capacity that isn't Russian. It's very, very clear to me, too, that the U.S. is looking for, whether it's smart or not, geopolitical security around supply of uranium. I personally believe that we have access, if we pay the right price, to Canadian uranium. That notwithstanding, our Congress seems to feel different. And while 5 years ago, as recently as 5 years ago, they were extremely hostile to uranium, now the U.S. Congress has decided to subsidize it. That says something about the perception of the geopolitical importance of uranium. I think the best testimony, though, to that, James, occurs by watching the Japanese actions. As a consequence of the Arab oil embargo in the early part of the 1970s, Japan Inc. came to the not-so-stunning conclusion that they needed energy security. And the only material that they could store enough of to power Japan was uranium. The energy density of uranium meant that Japan went from a standing start, an anti-nuclear country as a consequence of Hiroshima and Nagasaki, to having the second largest nuclear fleet in the world, specifically around energy security. The Japanese could store in one warehouse enough uranium to supply electricity to all of Japan for 5 years. You couldn't store that much coal, that much oil, that much natural gas, and you certainly couldn't store that much rain. Importantly, in terms of geopolitics and in terms of the carbon-free generation of baseload power, the big thinkers in the world, irrespective of their thoughts about uranium 5 years ago, have turned to it as a way to solve both geopolitical and carbon problems.
You have it, folks. Here's Rick Rule's comprehensive market update straight from the expert. If you found this video informative, please consider giving it a thumbs up and subscribing to our channel to get more valuable content. We look forward to seeing you next time. Keep investing wisely and stay tuned for more on our channel. Thanks for continuing to support us.